Okay, good evening, everybody. Hope everyone's okay. Hope everyone is, well, I've got to say that with a smile, haven't I? Given what we've been going through. But, normally the curse of the Avenger call actually may be providing us a little bit of hope. $4,500 up on the day with BTC, which is pretty much, I wouldn't say it's come in the last hour, but we have had some news in the last hour or so, which has certainly helped Bitcoin rise just a little bit further. But earlier on when the US markets open, we were down at about 79,000 today, so a fairly decent climb up it is. I hope everyone is good. Plenty to talk about. I think really what I want to try and express is we've got to try and understand where we are. I think that's the key, isn't it? Where are we in this market cycle? Because you can go onto crypto Twitter, and you've got to be careful when you do go onto crypto Twitter, but you go onto crypto Twitter and every view is just expressed right now because nobody really knows whether or not we're going down further, whether or not alt season's dead. I've seen people talk about categorically the 4-year cycle is over, whether actually this is just a healthy pullback within a bull market, something that we've seen before, and actually it's the market makers loading up and we're about to go to Valhalla anytime now. So plenty of mixed views there, but I think there is some information certainly within the charts that might help us understand where we are in the certainly in the next couple of days, weeks, unfortunately, perhaps, to try and sort of understand where our risk should be, whether or not we should be panicking, and where that's going to go. So we'll try and go through some of that a little bit today. Always intrigued to gauge just generally our sentiment on where we think we are. Discord, I put out a poll over the weekend, and basically 24% of people were starting to worry that actually the bull market is over. 76% just think that this is, natural pullback. And we're going to talk about that a little bit later on when we go through where the rest of sentiment is. But before we run through these charts, let's just look at, you can't see, so I'll move it onto that screen. Let's make sure it is on that screen. Sentiment at the moment is pretty dire. Fear and greed index for cryptocurrency, 24. We've seen it as low as 10, 20, 15. Even last month we were, below 50. In the 46 territory. So gone are those days of extreme greed right now. We have a look at coin market cap. They measure theirs slightly different. 15 it was at the start of play today. And we have seen the lows of 17, 24, 37. So kind of in the same ballpark. What we've both seen across the board on both is extreme fear. Now, a couple of calls ago, we talked about, it will likely be an opportunity to load up. We just don't know how far it's going to go down before we see some sort of recovery. But typically, whenever the markets are down this low, that is generally a good time for buying, blood on the streets and all of that. But it's not just the crypto streets, and I think that's the key thing here. We've got extreme fear across the board. So this is just the traditional markets. Extreme fear, 17. But actually, if you just go onto the timeline, it's nearly 10 days in a row that we have seen extreme fear. So just sort of down through here. So what was this? Sort of 24th, we were in fear, and then we dropped down into 25th into extreme fear. I know what's that. Can't do the maths at the moment. But yeah, it's around about 14 days, take away a couple of weekends, about 10 days. The markets have been down in extreme fear. And sort of when I went back through the charts to try and see, well, how long do we normally stay within this period unless there's something significantly up? And to be honest, it's rare that we actually spend extreme fear in the traditional markets for such a long time. You actually have to go all the way back to the COVID crisis. Now, that's a dirty word to say, where I think we spent about 23 days in extreme fear. But generally, the markets across the board are not looking good. And there is concern that actually, this isn't really a crypto thing. This is a risk-on asset kind of thing. Markets have been climbing for years. We've got a lot of uncertainty in the market, a lot of which we've covered over the last couple of weeks. And I appreciate I haven't done the usual Bitcoin charts, but let's just jump on this one. We'll come back to Bitcoin and where everything sits at the moment. You might not be able to see all of them, certainly the one in the bottom left. We're not going to go through them in detail. You don't necessarily need to. What you've got in front of you, okay, top left, we've got the US 500, the S&P. Then we've got the NASDAQ. Then we've got the Russell. Bottom left, which you probably can't see, is a US dollar. Bitcoin in the middle. And then we've got the VIX on the right-hand side. But what you can generally see without me needing to blow up the charts or anything, is that there is just a distinct pattern. This is, well, except for on the bottom right, there is falling across the board here. What is unusual, and you can just see it on the US dollar, is what we would usually expect is if traditional markets and Bitcoin was falling, there'd be a very good chance that the US dollar was actually climbing. What we were actually seeing is the US dollar climbing, and typically, again, that's something that we get excited about because we think, right, the dollar is falling, it means risk on is back, the traditional markets and therefore crypto markets will be climbing, but it's not. And so what this really means is there is a general lack of interest in investing, you could argue, in the US stocks, US dollar, just across the board. And that is not helping Bitcoin's case, regardless of people thinking that it is a flight to safety, it's an opportunity to hedge against inflation or to stick it to the man or whatever. It's a risk-on asset, a very risk-on asset. We're going to talk about the volatility of Bitcoin a little bit later on. And so if no one wants to invest in traditional markets and no one's really interested in holding the dollar, we don't really stand a chance, in my opinion, of making any kind of recovery out of this, regardless of any good news that happens to fall our way. Now, what we can say is there have been elements of relief bounces, and we've started to see a little bit of that today. Maybe not on the S&P 500, but on the NASDAQ, we're slightly green at the moment. The Russell, we're slightly green. Bitcoin, as we've already addressed, has had a good day. We're going to talk about the VIX in a moment. Dollar's kind of falling still and stabilizing away. Now, I don't really want to, the VIX. I'll just blow up the VIX because we used to talk about the VIX quite a lot, back in the bear market when we were just trying to scramble around to, find out whether or not we should be taking side steps, whether or not we should be, utilizing any sort of sideways action or whatever. And we always sort of had a look of, if we get into that 30 zone, then it was always an idea to perhaps actually start to load up on risk on assets. Well, you move a little bit closer to where we currently are now, and we've not really ventured into that 30 zone that often. Matter of fact, in the last sort of 9 months, we've had 2, maybe 3 occasions in which that's happened. The key one, though, the one that really sticks to mind, is the one back in August. So if you remember the beginning of August, we had a big collapse across the board in traditional markets and the crypto markets. I think it took Bitcoin down to about 49,000, but a lot of the other markets fell down. And it was the unwinding of the carry trade, which again, we've gone into detail before, but very quickly, it's just where people convert their dollars into the yen because it has a low interest rate, and then they take that and they invest it. Actually, I need to move that the other way around and invest that into the traditional stock exchanges, the American stock exchanges. And that's just a very profitable way of sort of like being able to utilize low interest rates there. But when the market gets disinterested in that, then they look to unwind it. And one of the things that may be actually taking place that we haven't really talked about to consider is just shrinking this down. Is that happening now because the US dollar's also falling with everything else? No one's invested in traditional market. The US dollar's falling as well. And actually, the Japanese yen is climbing. So they're converting it back into their own currency again. I don't know what they're doing with it. We don't need to necessarily go with it into that much detail. But the reason I mentioned that and talked about that is because, I don't know what I've gone and done there. That's the Dixie, that's why. Is because that's what happened in August. And we saw a nice V-shaped recovery from that, and the market significantly rallied. Sorry, this is what I wanted to bring up. Apologies. We'll use the S&P as the example. So this was the unwinding of the carry trade, and then we saw that huge recovery. So it marries in. Well, maybe we'll experience that at the moment. And with the VIX actually getting into that 30 zone, when it's high, you buy and all that, potentially there's some possibility that actually, and there's no guarantee of when it's going to end, that actually we may be just seeing that this is just, an element that's got overheated. People are just taking that risk on, but it's short-lived, and we will actually see the VIX start to come back down, Japanese yen versus the dollar start to come back down, and maybe we start to see that carry trade come over. There's loads of geopolitics that are going to be around that. I know that the Japanese are considering higher hikes within their interest rates, which has obviously diminished any returns that people had in taking that. So, a lot of little things. But the similarity within those two instances can't necessarily be mixed. So certainly the VIX is something that we want to have a look at. Now going back to what we're more interested in, Bitcoin, and where the cryptocurrency markets currently sit. And I mean, it's been one of those weird weeks, because if it wasn't for today's price action, I think this would have a bit of a different tone if we're being realistic. A $4,500 green candle today is certainly helping matters, and all of the candles you can see at the moment are on the 3-day time frame. So since we last spoke, what we've had just Bitcoin. It rallied up to 95,000. It collapsed all the way back down to about 80, climbed back up to 92, and then it's come back down. We've hit 76 this morning, and then we've seen that bounce from there. But the pattern is still, unfortunately, very much in a downwards trend. And without any EMAs, Fibonacci's, or anything else, just using our eyeball, we need to get above 88 closing on a 3-day candle to really kind of prove that this is some sort of recovery and to try and move that trend along. What is interesting with the dominance is we are now we were 5 minutes ago at 62%. We talked about that heading towards that 64. I think that's still very much the case. And yes, some altcoins you can see on the right hand side have had very good days. BitTensor being one of them, but Bitcoin's had a very strong day. And whilst it has fallen hard, it's not fallen anywhere near as hard as altcoins have over the last couple of weeks. Crypto market, so this is total 3 in the middle. Slight recovery right now, but again, still in a bit of a downtrend. Altcoin market is just struggling, and we'll get into that a little bit later on. And BitTensor potentially rising out of the ashes. We kind of saw, huge double top people have talked about, and then a neckline, baseline around about 220 to 200. We bounced off that at the moment. A strong bounce today, absolutely. 17%, 18% at $14 on the day. Very nice to see. Potentially running into some lines. These lines seem to have moved a little bit. We drew them last week, but I must have been messing around with them. Maybe I did them on the daily. I don't know. Anyway, but we're kind of running into potential areas where we need to recover. But the one thing about BitTensor, just on the 3-day time frame, is saying, we've got 1, 2, 3, 4, 5, 6 red candles in a row. It's 18 days of falling. It wasn't actually 18 days because there were a couple of days in which we saw some sort of recovery, but generally almost 3 weeks of falling without any sense of recovery. It seems likely that we're going to see some sort of bounce. Now, the idea is, and that's the question of the poll today, what are we seeing? Are we seeing a relief bounce? Are we starting to see the beginning of a V-shaped recovery? We have to just wait and see, unfortunately. So this is either going to give us, an ideal opportunity to maybe find a level in which we can take a sidestep from, or if we can get our patience right and sort of, timing and looking at the charts, we'll get to see that actually it's hitting past levels with strength, and this is a recovery. Now, I think I put it in Discord. I don't know. Okay, yeah. This was it. This was what we talked about a couple of days, maybe 2 days ago in Discord, about sort of the levels that we were interested in, sort of that 200 or 207 to about 223, and it was based on that 786. And I can't remember who it was in Discord. It might have been Kevin. He was saying that historically, BitTensor loves to retrace down to the 786, and at the time, I think when he called it, it was like over $400. and everyone was dreading the fact that we might end up getting there. But we actually did get down there. But that was just the chart there. There was something I put afterwards. Yeah, it's this bit. Tau, I don't see Tau actually making its recovery on its own. I do think Bitcoin, NASDAQ, S&P need to recover, and then altcoins are going to do it. It's not a Tau-led thing, in my opinion. Altcoins will recover only if Bitcoin and the rest of the traditional markets do. But that's what we've seen today. But this is the beauty of altcoins. And if you do back the right altcoin, is we see bounces that are greater than perhaps the likes of Bitcoin or the S&P or the NASDAQ. And what, we're almost 4 times as big a bounce today than Bitcoin's had. Yes, we did have several days in a row of double-digit falling on Tau. So obviously you've got to take everything with a pinch of salt there. But if we can sustain that and we keep on getting double digits, then there's a good chance we might actually be able to take some big chunks out of these red candles. And we'll have a look at those with vectors and everything else a little bit later on. Right. Now, sorry, some comments in here. Adams put, Ben Cohen thinks stocks remain weak until March. OPEX, to be fair, he's been absolutely spot on with his cycle, so I wouldn't surprise if he's right again. If so, another couple of weeks. Yeah, there's definitely a few things that I was just about to move on to with the stock markets, but one day of a green candle or some sort of semblance of recovery is not a full recovery, and we need to just take that into account. I'm just having a look down at the moment. The Nasdaq's actually gone red, and the S&P is red now as well. Although a lot of the other stocks are at least green on the day. Anyway, let's just wait and see. Chris has put, it was always likely that stocks would tank. Markets don't like uncertainty, and Trump was bound to cause uncertainty. BTC will follow the market. Yeah, a lot of these things are exactly the next point, so I'll expand on that in a moment. Arthur Hayes has been saying 70k and then a bull for the age. Just posted about it again today. I did see Arthur Hayes say that, and to be fair to Arthur Hayes, he has been saying 70k since January, maybe even before, but definitely saw him in the early part of this year calling that 70k. And again, some of the stuff we're going to have a look at later is we're going to try and see whether there's any credibility in some of those levels, but we've kind of talked about some levels down at 73, 72 before. Chris put, there aren't any adults in the room this time with Trump. No one he'll listen to, even if he changes his mind again on tariffs. It'll be something else unless he can get his tax cuts in early. Even then, inflation will start to bite. I think the one thing, the news that's coming out at the moment is there's potential that there is a 30-day ceasefire between Ukraine and Russia. And obviously that is a good thing. That provides at least a little bit of certainty within the markets. But much like Donald Trump's MO on the tariffs, is you almost get petrified that he gets in front of a microphone because you've no idea what he's going to say. Or even worse, he gets on Twitter or Truth Social or whatever it is, and he just comes out with some inane thing. And so he can say one thing one day and then the next day completely backtrack it. And I think for me, the news coming out about the Ukraine ceasefire, I think that's a positive thing. But I suppose the reason we're not seeing the Nasdaq and the S&P flying to the moon, although the markets will be closing soon, they might have actually closed because I know the US has gone back an hour or forward an hour, should I say, so maybe they have, is who knows what could happen tomorrow. Donald Trump could just decide to say something different to wind up Russia, wind up Ukraine, and then the deal's off. And as for the tariffs, so, Canada started talking strong back about what they were going to do from tariffs and how they were going to, fight this tariff war. And then Donald's just gone over the top again with an additional 25% tariffs on manufacturing of cars or whatever it happens to be. And to me, it just feels like a bit of a game. That game is creating uncertainty, and that uncertainty is leading to risk off. And that seems to be reflected in the markets, unfortunately. And not this one, not that one, not that one. Where was it? Oh, it was here. Sorry. And a couple of people have talked about this. People have talked about it in Discord. This news article kind of summarizes it as well. But is Donald Trump deliberately trying to crash the market to get interest rates down? Is he just saying things about tariffs? Is he creating that uncertainty and that speculation around it in an effort to drive interest rates down? Possibly, absolutely. How would he go about doing that? If he can bring a recession to the table relatively quickly, what we might end up seeing is obviously, unfortunately, things like people not spending as much. We could see job cuts, problems in the housing market, etc., that will then ultimately bring inflation under control and lead to us being able to cut interest rates. Then they'll have to turn the money printers on to try and get it out of a recession. It's a very fine balance. And again, I know Simon talks about it quite a lot. I don't want to waste too much time running through that kind of thing. But it does seem to me that a lot of the things that he is talking about or commenting on or changing his mind and flip-flopping about it's certainly impacting the market. So whether or not he deliberately is meaning to do this, his actions are causing investors to be worried. Don't know why I slowed down my speech there. Apologies. There was something I was going to say about this, and I can't remember what it was. I cannot think. There's a really good article here just about sort of why Trump may want to bring down the stock markets relating to a significant amount of debt that effectively needs to be refinanced, and just the way and the price of the 10-year bonds at the moment being as high as they are, that being refinanced is not a great thing. Whereas if you can, speed crash the market, bring the bonds down, refinance it at a better rate, that's just going to stand them instead in a better place in a short period of time. So I'll post this. There's a little thread on it, I think, and you can just sort of go through it. But I find it quite interesting. However, 20 minutes in already, I don't think we'll run through it just now. What was this one? Nope. Okay, just a couple of other things before we move into some charting. Because one of the things that we were really hoping for, that unfortunately turned into a bit of a nothing burger, was this strategic Bitcoin reserve, which was announced on Thursday. And then we had the crypto summit, which was last Friday at the White House, which again was unfortunately a bit of a nothing burger, a room full of, bigwigs in the crypto world just telling Donald Trump how much they love him. But the signing of the strategic Bitcoin reserve created a few shockwaves in the crypto market because of the uncertainty that came around it. And effectively, what it turned out was it was just renaming their Bitcoin stockpile, at least initially. So the strategic Bitcoin reserve is effectively all of the confiscated Bitcoin the US holds to date, which they don't know the exact figure, and an audit is being requested to be carried out over the next 30 days. Sorry, I lost my train of thought again, to find out how much it is, but they reckon it's around about 200,000 Bitcoin. Then there was the Secretary of Commerce and the Treasury Secretary are allowed to come up with cost neutral ways, so ways that are not going to impact the taxpayer, to acquire more Bitcoin. So that was one of the big kind of like hurdles that unfortunately the cryptocurrency market felt that they stumbled across, because we thought this was the Loomis Act, this was the Bitcoin Act, this was go for buying 200,000 Bitcoin a year over the next 5 years and never selling it. But that doesn't actually seem to be what Donald Trump was announcing on Thursday. And so people got a bit worried about that, because suddenly it's, well, wait a second, we're not going to be buying up Bitcoin straight away. Now, actually, we need to come up with ideas, and these ideas will probably take days, weeks, even months to come into fruition. Then they need approval, and then maybe 6 months down the line, the United States might buy 10 Bitcoin here, 100 Bitcoin there. I'm sure they'll buy more than that. So that was a bit disappointing. And then we talked about the digital asset stockpile, or he did. And this one was, I think, concerning. I'm sure people did read into it. But for me, this was, we're not buying any more. Whatever we have of that, we have. Yes, we mentioned ADA. Yes, we mentioned XRP. Yes, we mentioned Solana. But they were only mentioned, this was commented on by David Sachs, they were only mentioned because they're like, some of the top 5 cryptocurrencies out there. So we're not looking to buy any more of those. And the Secretary, the Treasury Secretary, the Secretary of Commerce has the authority to rebalance if they see fit. So if there's an opportunity for them to sell those, they will do, so they can try and find funds elsewhere. It may be that they sell them to buy Bitcoin. I don't know, but that kind of put a bit of a stink on the alt season, and also that digital asset stockpile reserve, whatever you want to call it. So wasn't the best of news over the weekend. What's coming out? This is the fact sheet. It's actually published by the White House, which goes through both of those. So I think it says the United States will not sell deposited Bitcoin. They are authorized to develop budget neutral strategies, as we talked about. And the government, this is now talking about the digital asset stockpile. The government will not acquire additional assets beyond those obtained through forfeiture proceedings. So maybe if the FBI confiscates some from criminals, then they can add to it. And the Secretary of Treasury may determine strategies for responsible stewardship, including potential sales of the US digital asset stockpile. So that he has the authority to sell it there. So not great in terms of they're going to buy and hold these things. And XRP and ADA are going to $10 because of it. And like everything, like the petulant child that we are as, well, retail crypto, but just into crypto investors, there was backlash behind it. We couldn't see the good. We could only see the bad because we have this bull run has been built on the premise that institutional and national sovereign state wealth are going to pump our bags. And suddenly that doesn't seem to be the case. And so we decided we weren't happy, setting that price back down over the weekend. And it just shows, again, the naivety of what we are as a market, as a set of traders, particularly with our emotions and our expectations of the reality of what it was. I mean, heaven forbid we go back 8 years ago when we were all demanding that institutions lay their hands off Bitcoin and the cryptocurrency world. But now we need them. So yeah, that's unfortunately where we found ourselves. I'll cover a few other news bits a little bit later on. Mark's put 73k BTC would feel right because it'd be a nice healthy 30k pullback, and the markets do close at 8 p.m. Yeah, so in the UK, so that's just something to just bear in mind. The UK hasn't moved to British summertime yet. We don't move till the end of March. So for the next few weeks, just the US markets will open sooner. US news, including CPI data tomorrow, doesn't come out at 1:30 anymore. It's going to come out at 12:30 UK time. So need to bear that one in mind. And that's a big day. You know, CPI data is usually a very big day. Obviously, it helps the Fed determine whether or not we're going to see any rate cuts. And the FOMC meeting is next week. I won't bother bringing the chart up. You can just believe me at the moment. It's currently at 95% chance that the rate is going to remain the same. But we'll see what the inflation data comes in as tomorrow. It's currently at 3, forecast to be at 2.9. Okay, Bitcoin. So here we are. This is it. And there's a lot of stuff on it. Let's just take the EMAs off for now. The standard chart you've seen every week, but here we are. And so we've had that fall away, 12-hour candles at the moment. There's effectively because of the movement we've had over the last, 5 days, there's no major buildup of liquidity levels anywhere now from 94,000 down to about 76,000. We've just wiped it all out, which means the market makers can move it in whichever direction they see fit. And the next real big ones to the north, it's actually not until you get to 99 to 100,000. It's that 100,000 level is where some of the short sellers would be ultimately liquidated. But there's a much juicier level, 75 down to about 71 and a half, for anyone that's still trying to go long on the market. And I bet, because I did this a few hours ago before the market pumped, we're probably starting to see that those areas are getting brighter and brighter because we love to just sort of go long off the slightest bit of good news. But in terms of actual price action, we are still falling down here. Yes, we've had that nice bounce, but where are we? We haven't even recovered where we were at 12 o'clock yesterday. So as good as today has been, all it's really done is recovered 80% of the losses that we made yesterday. And yesterday's opening across the board, crypto market, hundreds of billions wiped off. Traditional stock market, trillions of dollars in valuation wiped off yesterday. So, there is a mass exodus there. And we're seeing, an attempt of a recovery today. I think we'll just have to wait and see how that one plays out. I'm going to go into Bitcoin in a bit more detail, but one of the things that we started looking at last week, and this is going to start to help just build that picture again, get it in our mind of potentially where we're going. I've only just started using CoinAnk. I used to use a paid website in which I could change the colors. So you'll just have to bear with me whilst I sort of bumble around in the dark in terms of trying to get this to look at least a little bit better. But we've got the green and the red candles of the Bitcoin price. We're on the hourly at the moment, just so we can kind of have a feel. Where you've got bright pink, if you will, and bright yellow, that's historic buys and sell levels. Okay, so we're not necessarily interested in those. And if I could find a way to fade them out or get rid of them, I would. Hopefully by next week, we'll know if that exists. What I'm interested in actually is where price currently sits at the moment. And if I put my cursor over it, a big bar appears. But I'm looking now north and south. And what I'm looking at is the purple and the yellow areas. And this is sort of the order book, if you will. This is off Binance Spot. It's a fairly good reflection of where we are. And it's just trying to get a flavor for where do we see things. Because you've got to remember, when we're looking below the price, that's where the buys are, okay? When we're looking above it, that's where the sells are. And at the moment, without even hovering over it, you can see the density is much greater to the south. And that's sort of 70K to 75,000. It's a thick, decent layer of buys, just all the way down there. Whereas up at the top, there's still a few, but there's gaps. There's plenty of gaps within there. The amount of buys are not necessarily as big. Also, the length of them is how long they've been in the order book. So we are starting to see some, newer ones popping up that have been there, not as long. This one's been here for 5 hours, etc. We've got other ones that have been here for, 4 or 5 days. So there's plenty of sort of there. But just as a sort of a snapshot of what we're looking at, it seems to me that actually the vast majority of the order book is still below. So I talked about it in a post on Discord about Bitcoin trying to find its fair value and where it seems to be, where most people are going to be happy to buy it up. And yes, it seems sub 80 is that level, because we've seen a lot of buys got eaten up between 80,000 and I know 77,000, but there's still plenty more in which people are willing to buy 70,000 up to 77,000. We can kind of see as you go a bit lower, it thins out as you'd expect, probably because Bitcoin will have then be dropping below its fair value. And until Bitcoin gets back to its fair value, until we get to a level in which scares enough people to sell their Bitcoin to the actual big boys that want to buy it at the fair value, not at the 100 grand value, then the likelihood is that's where we end up going to go. So this image here says, I don't know how long it's going to take, but unless these buy orders get removed, this feels like this is the area we need to concentrate on. So it's anywhere from 77 down to 70,000, maybe 71, if that 70,000 level kind of scares you a little bit. Now, these are just buy orders. You place a buy order on Binance at 70,000, it will take that into account there. They can be removed at any time. So it's not something you can just fire and forget. You kind of just need to watch it, but you get a feel for where things currently sit. What's that I'm doing here? No, let's go back to this one. And so what do we have? Well, we have those liquidation levels that just so happen to be 71,000 we talked about through to, 75, it kind of tapers off. But also we've got this back to the previous all-time high, the March all-time high, 73,800, give or take a few dollars. And so that's smack bang in the middle of it. And so it kind of feels that actually that is kind of drawing us. There's a lot of buy orders around about the previous all-time high from March of last year, 12 months ago, tied in with this sort of, within that liquidation block for anyone that's trying to go short, that'll be. No, long, that'll be, sorry. And so yeah, that's starting to tie in. We'll have a look at some other levels in a moment, but right now, 71, 75 does seem to be like a logical place. We've got, a little bit of a shelf around about November here from terms of price action. But, we've gone through this before, but there's been plenty of times where Bitcoin's kind of got into this sort of bottom range, 71,000, and rejected from it. And remember, sort of like it kind of leaves a memory. It's like muscle memory in the market. So if we get back to those kind of levels, muscle memory kicks in, buys get bought again, and off it goes. And you can kind of see, we had it there. We've had it, June, May, plenty of times in sort of April and March as well. So that bottom level, it can't be ignored, unfortunately. I think we have to be realistic in where it's going. And someone mentioned a little bit earlier on about a 30% recovery. I think we've already had 30% recovery, if my maths is correct. I might be a little bit off. So let's just pull it. Yeah, it's 29.86% from all-time high, which I think I've got 30% there, but I might have zoomed it in right. All-time high to where we dropped down to today is a 30% pullback. So, we've seen a fairly big pullback. We've talked about pullbacks in previous bull markets, anywhere between 20 to 40%, 30% being the mean. Well, we've had that now. And so, if all things were equal, then we could start talking about that seems fairly logical. Unfortunately, we've got the big elephant in the room that the traditional markets may not be wanting to recover as quickly as that. So we need to think, all right, well, where could we take this? Let's just move to one side to have a look. So what I've done is I've gone from this level down here. So this is the August Japanese carry trade. I've not quite lined it up perfectly, but it's pretty darn close to there. So we've taken from there to the all-time high. We've had a look at some levels of where it's gone. The 236 was a very good level, forming that double top in the end, unfortunately, but a lot of action there. We've been battling. I mean, when I first looked at this on Sunday, I was like, that's perfect. It's actually closed on the 382, but then yesterday it fell through it, and today, just to make it even messier, thank you very much, it's climbed through. But the 382 is there. But just have a look at the 0.5. Look what it lines in. 73,594. Before it was 73,749. So pretty darn close. Line up with that, which is line up there. Line up with the all-time high. If we took it back, that 0.5 level seems like a very good level for us to want to have a look at. Other things on this chart that we need to consider is just the fear and greed index down here as well, just so we can kind of see visually how that's looked. And we have unfortunately been falling within that fear and greed. And yes, the fear and greed has been climbing up, but just because we've been getting used to being at these low prices and getting used to prices going down, not necessarily that we've actually got to the point of capitulation yet. And so, we need to see, well, what would be a capitulation level? And I don't really want to have to talk about that, but I would argue losing the 618 would probably be a point where we start thinking about capitulation and some kind of recovery. Mark's put, would the bodies of the candle rather than the spikes equate to a 30% pullback? Okay, let's have a look. Everyone knows I typically normally do body to body. So the body of the all-time high to the close of the current is 26, you're right. I do normally do body to bodies. I have deliberately done spikes to bites because this was obviously a big drop off here and I wanted to get the very all-time high, which because the day candle didn't close. But yeah, I get your point there. 26% from body to body at the moment there. Okay. Sorry, train of thought again. What else do I want to put on here? I can't remember. Let's just get rid of the fear and greed because we have, if I can find out to expand that, the RSI as well. And the RSI and the daily, it's just continuing to fall back down. We did dip below. What was this on 25th of February, sorry. And then we've gone lower in price, but higher in the RSI. I need to remind myself because, is this a bullish divergence or is it one of those weird hidden bearish ones? I actually can't remember, but the RSI is at least making higher claims after dipping into the oversold level. And we're going to talk about other markets being oversold in a moment. In terms of the ETF, just sort of a reflection of smart money in crypto. Again, canary in the coal mine. I think we need to at least start to, address this. Because I've always said, hey, if I see a full screen of red, I need to be a bit concerned here. And okay, we've only got 13 numbers on here because today's hasn't completed, and 10 of those are red. One of them was 0, so kind of a neutral one. So let's just call that 11. And I can assure you today, BlackRock have been selling. They've sold 1,200 BTC, so it's highly likely that today's is going to be a red as well. Now, in the last 3 weeks, they have sold, roughly 15,000 Bitcoin of what was a balance of 585. So in terms of percentage, it's tiny. I get it. But there does seem to be something that's marrying up with the traditional markets, smart money, investors, institutional investors saying, hey, risk off, please, right now. I'm not feeling the risk on side of things. Now, I don't think I saved it anywhere. Let me have a look. Just put it over here. Oh yeah, I did. Took this screenshot today. Smart money index. So smart money is actually getting pretty close to buying at the moment. Now this is on the S&P. Dumb money is selling. So when we go back to institutions in crypto, we're thinking, well, wait a second, the smart money there is still selling. It's because we're about to get, but potentially about to get back to the buying levels if you go by the smart money, dumb money index there. But right now, just looking at this and something I've always said I'd like to keep an eye on, it has just been red across the board. And if you don't want to just use BlackRock and just actually go across with what we're seeing totally, then it's even worse because it's actually 12 days of red, and it'll likely be red again today. So yeah, it's one to consider where we are with that one. And again, I'll just keep monitoring it. I don't know the answer of where we need to feel particularly nervous. I think it's just going to be that, unfortunately, that intuition, that feeling of, right, we've seen enough here. Now, you know, if we have a look at the cumulative inflow of ETFs, look at it. I mean, that is still an incredibly bullish chart, regardless of a pullback. You know, we can't say anything but that. But it does seem to be 2025, which we thought was going to be Bitcoin's year, a lack of interest in Bitcoin at the moment. So, yeah. Right. Should we talk about some potentially positive things? You know, I mean, we can sit here and talk about doom and gloom until the cows come home, but maybe we shouldn't just ignore the other side of the coin there. And so some of the positive things that I think we just need to consider. This one's on the fence, so, but you know, warm us up from the negative stuff. What have we got here? So I've just highlighted the red. This is the Trump election result. So this when he got into power. Do you remember the huge pump from 67,000 all the way initially up to 108,000 and then finally getting to 109? But look, Bitcoin actually, despite the rest of the markets, Bitcoin hasn't retraced that yet. Not fully. In fact, we've only retraced, well, we just did it 30%, didn't we? But roughly 30%. I mean, if we do it from now, 24%. And so, yeah, you know, you could argue that there's at least some strength there because Bitcoin's been able to hold its own. And when you sort of add on the NASDAQ, the Trump pump here, which was at 20,000 effectively, and yeah, it made its new all-time high just like Bitcoin did. But look, I mean, it's fallen faster and further, and it's, you know, it's now gone past the Trump level. So this sort of the idea that Trump is the one that's bad for crypto, it's just not been great across the board. And actually, crypto has been held up. So you could argue that some of the news, although it may not seem like it's helped support Bitcoin, may have given it at least a little bit of strength to sort of hold on. Or actually what we're seeing is mass exodus from smart money on the traditional markets, but the likes of BlackRock et al., we're not seeing huge withdrawals relative to the size of their balance. I mean, as I said, I don't know what the maths is. Maybe one of you guys can work it all out, but 15%, 15,000 of 800 and, let's start that maths again, 15,000 of 585,000 BTC. So, and it's not the only one. I don't want them to confuse things, but look at the S&P as well, even further falling. So it's gone past where Trump was, and that's a reflection just across the traditional market. So, you know, you could argue Bitcoin's not fallen as far. Maybe that's showing some strength and the ability to do it. But what it also says to me is there's actually probably still a bit of room for Bitcoin to fall. As the traditional markets continue to correct, whilst it has held up that, there's still people, I can't find the right tool now because I've used something else. from this zone here that bought, which you won't be able to see because my head's in the way, sort of that 68,000 to 76,000 that have arguably got off unscathed. Okay, they've round tripped it, but arguably got off unscathed. So if we do see the traditional markets continue to fall, we've got room, unfortunately, to at least the Trump pump level. And you could argue that sort of 67,000 was a fairly fair value of Bitcoin for all of last year, given this sideways action we had for 9 months. So maybe that's what people are looking to revisit. Arthur Hayes talking about it, Order Book talking about it, Fibonacci, retracements down to it. So certainly there. And then you have a look at this. So I've used the Ecocoin metrics before. You can follow them on Twitter. I signed up to a newsletter as well, I think. But this sort of gives you an idea of where Bitcoin's actual price is compared to where they argue the model price of Bitcoin would be. The model price of Bitcoin is this red line, okay? And using some form of standard deviation compared to the price and the amount of Bitcoin that's been bought via the ETFs on any given day gives this figure. Ultimately, however they've done it, they've not necessarily explained. But you can see here that, okay, this was done a couple of days ago. It was done yesterday. Bitcoin's actual price at the time, 80,000, was above the model price, and the model price is arguing this around about 70,000. Now, the model has this cloud around it, which obviously could go down as low as below 60,000, or it can kind of stay in and around the price that we're at the moment. But when we mention the words fair value, it kind of feels like that fair value still around that 70,000 we're talking about. So maybe just another one to consider in terms of where we potentially may be going. Other news, potentially bullish news that I've seen people talk about. I think we've talked about in Discord as well, but I've seen this chart produced on Twitter and YouTube videos by other people. And so what we've got here is global M2, not US M2, global M2 versus the Bitcoin price. The Bitcoin, I sound like a noob, a no coiner there, versus Bitcoin's price. And what we can kind of see is there's a lag. There's a 10-week lag here. But actually, despite Bitcoin's price going down, M2 has been climbing. And so the argument is that potentially in the next couple of months, we may start to see Bitcoin rally up as the realization of all of this additional M2 across the world starts to flow into risk on assets, including Bitcoin. And so it's not saying it's going to be tomorrow, but it's potentially a chart that says this is usually very well correlated. Right now, we've got a little bit of a lag. Maybe we're actually going to start to see that Bitcoin is going to refine its correlation and it's going to move back into it. The other thing, and I think this one we talk about in terms of, and someone asked again in Discord, how do we know if we're going into a bear market? Typically what we've used in the past is a breach of the 50 EMA on the weekly, a close below and a failure once it happens. Now, in this entire cycle from 2022 onwards, once we broke through the 50 EMA on the weekly, yes, we've retested it, but we've not spent many times below it. We had a bit of an issue in late 2023, but we didn't really lose it. We were just hugging below it, and then ETFs were announced, and we went to Valhalla and climbed up. And then last year, the boredom of the summer moving down, we got back to it. But again, apart from the carry trade unwinding, we've just hit it and then we bounced through. And so all that's actually happened is we've just, like that piece of string, that rubber band, we've stretched so far, prices just naturally had to get back to it as another correction in terms of this. And so we have. And this, this is today's candle, and it has perfectly hit the EMA. Now, we could, arguably, we've seen this back in 2023, we could actually still fall back down, maybe close slightly below it. But until we, fully close below it, retest, and start to see movement back down, we've got to just say that actually we're still in an uptrend. As difficult as this fall has been, and last week's fall candle, I think, is the largest weekly candle fall anytime recorded in Bitcoin's history, because a 30% fall back in 2017 was like $6,000. A 30% fall now is $30,000 because we're near 100,000. So the actual dollar value of what it is what's hurting, not the percentage value. And that's always going to be the case as Bitcoin, appreciates over time. So sentiment may be hurt from it, but actually we've just gone back to the 50 EMA and we're just in that process of correction. We've seen, certainly in 2023, it took a few months to get out of it. Even you could argue in 2024, it was like over the space of about 6 candles to 6 weeks to sort of get out of it. So I'm not saying we won't retest it again, but it's about maybe we won't break through it. And we almost retested it with this candle, 2 weeks ago. We almost came down. I think I put this. So this is the EMA. What the simple one's like. It's kind of similar. Okay, we'll stick with EMAs. But if you have a look, previous cycles, we had in my opinion, a very similar event. Came out of the 2019 bear market. We rallied up. We messed around to it. Then we had the China incident, the dirty word incident, which, shocked the markets, took us back down. Black Swan event. Who knows how this might have played out if that was different, but it recovered very quickly up to it. So you could argue, the evidence doesn't lie, but I think there's the mitigating circumstances. We shot up, we got that elastic band feeling, and we were smacked. Corrected, back into it. Again, we only closed below it once, and then we immediately recovered it, and then we went for our new all-time high. So it does seem to have precedent that this is it. And then when you lose the 50 EMA, this is where a bear market's confirmed. Lose it, retest, rejected, and away we go from it. So, we may just have to be patient with where we are. And the other thing we've got to say, and this is across the board, but traditional markets right now, they are oversold, okay? We have been falling hard for weeks now, or days now. And so there is likely, however short-lived it may be, to see some form of correction. But when we get into these levels, and they don't happen very often, but when we get down into sort of oversold, we see strong bounces. We don't know when, but we've fallen into this. We've fallen into it before, just tipped into it both these times, bounced up through, just missed tipping into it there, just bounced back through, came back down again, hit it, bounced back through. So that's the same across the board. We can see it with the NASDAQ. And so, okay, we are starting to feel the pain now, but there has been a lot of selling. And so, a bit like with the fear and greed index, we don't know how long it's going to last for, but generally oversold times don't last. Well, they don't last forever. It's not a generalization but generally it's a good idea to be starting to buy. So for those of you that are thinking about buying stocks or wondering what's happening with the stocks, for those brave enough, and I'm not saying I'm brave enough, you can either look at this as the collapse is coming or there's an ideal buying opportunity. And that's just however that was going to work in your head. Right now, I've not really bought anything else. I've been kind of having a look at them, but I'm just waiting to see. I think the whole point at the moment is just wait to see and wait for that confirmation that we have some sort of recovery before diving in. And you may not get the exact bottom of this drop. That's fine. Just wait for that recovery and then move across through to it. And then, hey, if you want a bit of pie in the sky thinking, someone ran the old Monte Carlo model and it forecasts $713,000 Bitcoin in the next 6 months. No, I mean, it does. The range is anywhere from 51,000, so this thing could drop, sorry to dampen your spirits, up to 713,000. But the mean average is 258,000, and they reckon that's by September 2025. So, hey, there's always potential. Chris, I see your point there. Oversold can last in a recession. We haven't got to the recession at the moment. Donald Trump said that we might get, I can't remember the exact word he used now. Economic, what did he say? I can't remember how he phrased it. But I don't have it saved. Economic uncertainty, something like that he mentioned. So yeah, I mean, again, we could argue we've already been in a recession. They moved the goalposts a couple of times, didn't they? But yeah, I get your point there. And then whales seem to be still accumulating. So here's a chart. I don't have access to the paid version of Crypto Quants. I've taken a screenshot of this off Twitter. So apologies if it looks a little bit fuzzy. But this is Bitcoin total balance and balance changes of large holders. So anywhere from 1,000 to 10,000 Bitcoin. And just have a look at the right hand side. Whilst the price is falling, so the black line is Bitcoin's price. Okay. And it's dropping down to about 8,000. This purple line is the total balance. And actually, as Bitcoin's been falling through January in price value, whales have been buying, okay? So look, these wallet balances are going up and they're continuing to climb. And the mean average of 30-day change is seeing a significant climb out of where we were. I think it's something like 65,000 additional Bitcoin. It was 3.36 million, and it's got to 3.46 million, or I don't know, maybe it's 100,000 Bitcoin. I thought it was 65,000. But anyway, whales are buying. Smart money is buying. They generally know when to buy. They're not going to make it easy for us by allowing the market just to recover immediately from it. But for those of us that are holding on where we are, they seem to be doing the right thing. Thing. And then we got old Cynthia Loomis, who did a classic Justin Sun on us yesterday or this morning, where she little post, "This time I'm for real," and it was big things are coming. But she got on stage today and she announced that she is resubmitting the Bitcoin Act following on from President Trump's strategic Bitcoin reserve. So she's still moving ahead with the Bitcoin Act. Remember, the Bitcoin Act is purchasing 1 million Bitcoin over the next 5 years. Obviously, it needs to be approved, but she is committing to putting this back forward and would like to hope, I'm not saying it's a positive news, but we've been hanging on to, all of these Bitcoin news announcements. So I don't think we can ignore this one. Now, unfortunately, it doesn't give a date for how long this may take, or, when it's going to sort of sit with anyone. I don't really know how Senate and the Congress and all that works. So, you'll have to forgive me on that one. But she has announced that they are resubmitting it. They have made some minor adjustments, particularly with what's been announced over the last few weeks. But this is, again, I imagine months at the earliest, but still positive news nonetheless. Right, we'll get into some charting in a moment. I just had one question. Oh, Bobby Welsh has put none. I don't know what that is, but okay. Pete asked me a bit of a question on DMs, which I put here, which I thought it got me thinking, actually. So he wanted to know and explain whether you can withdraw any crypto bought on spot. Most exchanges default to a first in, first out instead of a last in, first out, which makes a difference to your profit if trying to buy dips to offset losses of earlier buys at higher prices. Is there a way around this? What is the best practice? And I hope that makes sense. And my honest answer is I don't actually believe there is a way around it. Because I'm assuming you're talking about buying on an exchange and holding it on the exchange. And you've got to imagine that although when you log on to the exchange, you log onto your account and you've got what looks like a Bitcoin wallet on there, which gives a value of how much Bitcoin or whatever asset you happen to own. But you've got to really understand that actually it's just a hot wallet with loads of that asset, and loads of exchange users effectively have access to that giant pot, which is why we always stress to never really keep it on an exchange. So it doesn't, as far as I'm aware, really tally or track, in terms of access to that giant pot of whatever asset it is, how many times or what you bought. It just gives effectively a key card that says this person is entitled to withdraw X amount of a crypto asset. And so there's no other way around that. Now, arguably, if you were to move it to a Trezor or a hardware wallet of some description, then maybe you could, because you could engineer it by just sending it to different wallet addresses on your Trezor. I'm thinking of Bitcoin here. And then you just be able to keep track of which ones you sent first and last. But again, if you just sent it to your Trezor address, again, your Trezor, I'm saying Trezor just because that's what I happen to use, is just it doesn't actually physically store it on your Trezor device. Your Trezor device is just an interface to give you your private key to access it wherever it's, saved in the ether. And so I don't believe it has any way of sort of managing that either. You just have to manually create new wallet addresses, which is very easy to do on your Trezor. You just give a different passcode each time, but then you just have to track it. So in terms of trying to manage your profit, I don't know if there's a way, and I don't know if you need to necessarily be that efficient in doing it. Perhaps someone can correct me if they're wrong. But when you go to do your taxes, there is a setting. So your taxes, the tax calculator, typically the ones that I've used. I was going to bring it up, but it would just flash up my tax return. So I just decided not to. So you just have to trust me on this one. There's a setting you can toggle between, which is, I think it has it as default as first in, first out. And so that has an implication on your taxes and on your profit that you've made. And you can toggle it to last in, first out, which, perfectly entitled to do in terms of monitoring it. So at least from a tax point of view, it will try and capture it in a more efficient way for you. So you're ideally avoiding having to pay as much tax. Maybe you want to recognize a bigger loss. I don't know. But that way is, but I don't believe there is any way around. And just thinking about it today, the only way I could think about best practice, get it off an exchange straight away, first and foremost. And if you wanted to, just send it to separate wallets, keep a log of those wallets. There's all sorts of security issues with that, but you just have to try and balance whether or not it's worth it. Anyway, yes, when he first went bankrupt, wasn't it? I'm not sure what that was. He, not me. Okay, Whale's buying, and if the 50 EMA holds, that would be great news. Yep, hopefully. Greg's put, the VIX still makes me nervous. Crypto dump following the December 24 spike. It also seemed to be more of a trend rather than a spike. It did. Let me get Bitcoin chart on. Let's overlay. Let's go daily. Let's get rid of that. We'll get on to altcoins after this. Just see where things stand. Let's just throw on the VIX. New price scale. So December. It did, you're right. It did. I mean, it spiked. It spiked on the sell, didn't it? So it wasn't like it was building up as it was leading up. But you're right, it didn't rebalance itself as this thing came back down. I accept that. But traditionally, the VIX has been a good indicator. I mean, they all have outliers. But Greg, you're right, absolutely. That's why we take everything with a pinch of salt and we have a look at a few things. Okay, I'll start with Tau, since it's on the screen. We'll do Bitcoin in the lower time frame. We'll have a look at ETH and maybe have a look at a few others. CAS has done well today. I don't think there's any others in double figures. We'll have a look at things at Bitcoin dominance, and it's already 9 o'clock. So we've already been rambling on for an hour. So hopefully that will do. But let's have a look at a BitTensor. So we're on the daily at the moment. You can kind of see where I took that screenshot from before. So I'm going to get rid of this yellow box. That was where I thought was a good value for being able to get back in. And what we got here, bouncing off that 786. I think it was Kevin. Apologies if it's someone else, but what a great shout it is there. And we've seen that great bounce today from it. But look at what we've got ahead of us. And I just want to temper things, because yesterday we were all absolutely panicking. Today, a nice green candle like this could cause us to just change our mind quite suddenly. But we've got to take these green candles with reality. Yes, they're good to see. Is my portfolio balance better right now than it was this morning? Yes, that's great. Has it recovered? No. And does it have a way to go? So what can we monitor here? And that's what we're looking for. So I'll peel back some things and then we'll add them later. But let's just get rid of, what should we do first? Yeah, let's get rid of fibs. I mean, no, I'll say, from a fib point of view, we're below all the major fibs. So we've got the 618 at 290, 350-ish, we've got the 5, 415, we've got the 382. So we've got, quite a bit. And, we've really, to get back into the noise of recent price action, we kind of need to get back up to 400 So without looking at EMAs or anything else, the fibs, which we know price likes to play around with, there's those three, all of those three stand in our way before doing that. This fib here drawn, so from again the August low to the top, and then we've just watched it there. Right, let's get rid of it, and then let's see. And I will drop it down on lower time frames as well. But now looking at sort of vector candles and EMA, so we don't really have any active vector candles. So what we had, look, why did we see that the area we were talking about was an area of fair value? We'd fallen there before, but also look at this vector candle that dropped down in February. It's interested in the wick, I know we recovered it on the day, but when we talk about that market memory, there was just an idea that actually it's going to get back down there if we start losing momentum anyway on the climb out. That'd be an area of interest it might end up getting to. Obviously, it fell a little bit further. But this fall here has fallen in a state in which it hasn't done it on mass volume. So we don't have that many vector candles on the daily on this way down, which you can argue is a good thing because, there's no extreme amount of selling pressure on the way back down. The bad thing is obviously they are memory markers for the market as well, which could have helped to move price along through that. What we do have though is 4 EMAs in front of us. We would have 5, but Tao's not been around long enough for the 800 EMA to form. But they're spread out quite nicely. The fingers of the hands are spreading out quite nicely, which is never really what we want to see because it's a strong battle in there. And we haven't actually hit the 10 EMA since 2nd of March, so over a week now. So we're heading up there. We're heading up there with a green vector candle, which is great, but we've already started to see on the daily, it's not really moving that much. We've been around this 265 now for a couple of hours. So maybe starting to run out a bit of a momentum from that. We want to be breaking through this, unfortunately, with speed, okay? So we can then take on the next one. But the biggest one for me, unfortunately, has to be the 50 EMA. It's the one we always talk about. And since we've been sidestepping in since December, it's the one we've kind of talked about as the key of our level of selling from when we want to sidestep and move away. So, that 50 EMA itself, or the top of the cloud, particularly as there is vector zones up there, would be something that I'd be interested in. I would say that actually now that the 200 is getting pretty close to the top of the cloud and it's smack bang in this vector zone here, you might argue that actually that might be the top of the level. You're looking at 430 as an idea of where it needs to bounce. But ultimately it needs to break that. It needs to break that on the daily and stay above it for us to start to think that this has fallen. So it's a long way to go. We've pretty much got a double in value. Well, where we were today, sorry, at 220. We've made a good effort. We're up 20% on that today. But when we go down lower time frames, we can start to see a bit of the noise. And here we go. The 50 EMA. Well, that's funny, isn't it? So we've shot up on the 50, on price action today. We were able to break with speed. Look, vector candles through the 10, through the 20, continuing with a green vector candle, but getting held back, unfortunately, by the 50 EMA in that downtrend right now. Now, we've got another 2.5 hours or so on this next candle, so it could go green and also could break that. But we will be monitoring and looking at that 275 level, which we want to see it break and go through. And then we can start talking about trying to take out lower highs at sort of like 300 and then 350. So nice round numbers for us, at least to remember. But look, as soon as we drop down the 4 hour, the 50 knocking us back, and it's done it for a few weeks now. So yeah, it's one to prove. I'm not necessarily too worried about this vector candle here. It will likely get taken out even, in the next few candles. It doesn't mean that we're dropping back down because actually it's forming quite nicely above the 10 EMA. We can see on the 4 hour, these have turned. So, that shows you the strength that today has proven, that we've actually been able to turn both the 10 and the 20. We're waiting for the cross for that to happen. And then if we can get that cross going back over the 50 with the momentum price going up, perfect, happy days. I don't think the hour is going to really say too much more for us because I bet the 200 is going to be in the way, and it is. But you can, so this is, that's what I'm talking about. Turns, broken through, and now they're starting to fan out. Obviously on the hourly, it's a bit bit less, but we can see at least on the hourly there are some vector zones here for us to start to try and attract. So, you know, that 300 we talked about and that 350, it's a nice sandwich of vector zones in there in which hopefully we can get through. So bit of work that needs to be done on Tau, and yeah, we'll see how that one goes. Now let's go back onto the daily and go to Bitcoin. Oops. So again, some of the zones that we drew last week. Why did we draw that one there? Was that a vector candle? Okay, yeah. So on the weekly, I'm trying to remember why we did it last week. So these are the levels that we drew last week on the weekly. And actually, if I remember now, so let's... Oh, it's not that one. It's gone too far. Sorry, let me undo that. No, that's right. Okay. So what were we looking at here? We were talking about vector candles. So we did the bottom of this vector candles to mark it off. We did this one here, which is the 50% zone of that one. And then we did the bottom of this vector candle. So they were the reasons why. Obviously, we had that massive wick down, which took out that vector candle. But price closed on it last week. So good level opened, obviously. And then it wicked down yesterday or this early hours this morning. Hit the 50 EMA on the weeklies we've already talked about. But also that was the 50% level of that previous vector zone. You know, that whole large move up from sort of here to all-time high. That was the 50% zone. And so it's kind of cleared that, and we've seen some sort of bounce from it going on to the daily now. So that's why those lines are there, fine. But again, you know, we're still unfortunately below everything except for the 800 EMA on the daily. You know, the 200's even there right now. So the 10 and the 20, the 10 and the 200 right on top of each other right now, around about 85. So we've got to find some momentum to get past that. You know, that's just how I always look at them. You know, 10 is one that we're normally always drawn to. 200's a bit more to break. So I'd expect a pullback to the 10. I'd actually expect a pullback to the 20, maybe even the 50. But getting through that 200, it's got to be done with a bit of speed, in my opinion, to get through there. So when we're looking at that, and we can mark off that level now. So let's give it to some of these other ones. So we just mark off that level. But now, so when we go on the lower time frames, we can see how that might disrupt things. But 85,700, we drop it down onto the 4 hour. Okay, the 50 is just a little bit beyond it. But there is, you know, 4 hour, this seems logical. In my opinion, getting back to 85,000 seems logical at a minimum. Okay, and then that would be the level of, right, what's it doing? Is there an opportunity here? Because we've already cleared the 10, we've already cleared the 20, we've got a vector candle recovery zone in around there, and we know that price action is just attracted to the 50 EMA. The top of the cloud happens to also be where the 200 EMA is crossing on the daily. So we might actually see price just break through the 50 EMA, spike up, touch what would have been the 200 on the daily, and then we've got to make it up. So that's what I'd be looking at. That's just how it is. Yeah, 200 and the 800 on the 4 hour, pretty much on top of each other at 90,000. And we talked before about you needing to get above 88 before we could start to realistically talk whether this is a recovery. And then even then, 2% more. And we've got a big battle there. But I'm still happy with how today has gone. It's just making sure, well, not making sure. We just need to identify recovery, dead cat bounce. And this is the level, I think, that 85,000, what's it do at 85, 86,000 in terms of price action? Does it roll over or do we break through it? Then we can start having that conversation. Ethereum, whew, tell you what, wow. I mean, we're back to bear market levels, aren't we? You know, this is March, this is 2 years ago price action, you know, 1,700. It's just been so disappointing on the weekly. Just generally, I suppose. But a lot of work to do. And I think it's just a reflection of old crypto, perhaps, in the sense of just how it's, you know, either just not modernized and adapt, or it's just not managed to capture the interest going through. But this one has just fallen through. And I don't really want to go in in the lower time frame. I just wanted to try and draw your attention to just how far, unfortunately, this thing has fallen. So we are below 2,000. That's the reality of the things. We are below 2,000. And on the weekly, what do we talk about with Bitcoin? Weekly, 50 EMA. We're below the 200 EMA on Ethereum. So, yeah, not particularly great. I don't own any, and I've only really owned stuff to pay for gas fees. So, but it's one to watch. It just doesn't seem to pump like the others do. Kaz had a strong move today. Apparently, it got recategorized on CoinMarketCap as being made in America, which I'm sure is going to have helped because obviously there's a bit of a focus at the moment in terms of American-driven cryptocurrencies. But again, on the daily, look what we can see. So it's fallen hard. And I mean, it got down to 5 cents. We talked about that 5 cents. Someone asked me it was going to happen a while ago. We have just Bart Simpsoned this entire thing, haven't we? Sadly. This entire move over the last 2 years has effectively been undone now. But we've got to the bottom of it. So that's what counts. Sorry, I think my son's up. Let me just double check. Apologies. He is. He'll be down in this room in a moment. I guarantee you. Right. There we go. So we've got coming up to the 10 EMA. And it's green vector candle. We've broken through it, but it's still balancing. Sorry, still bouncing off that one. I don't want to, I'd want to try and treat this one the same way as I've looked at other altcoins, because I think this one has kind of fallen off the radar a little bit. I understand it's got some fundamental announcements that are coming out with 10 blocks per second, although I believe that's been pushed back a little bit. But in terms of this, that's what I want. Where do we take this move from now? That's the problem. Do we take it from November 23, or do we take it from August? I mean, that's when it made its all-time high. I'm just trying to think where we would realistically try and draw a fib level from. I don't really know. But I will give it its credit. It's had a strong move today with the market, which is good to see. But it has everything. On the daily, the 800 is still in the way. So we got the 10, the 20, then the 800, then the 50. Last time it touched the 800, it rejected from it. It coincided with the 20 and the 10. Similar kind of battle at the moment. I think that's sort of a one to watch really for me. 8.5 cents there. This thing is coming down hard on top of it too. So maybe by the time it gets there, the 50 is going to be right on top of that as well. Definitely one to bear in mind. And I just generally feel that, with altcoins at the moment, in my opinion, I've talked about this for a few weeks now, yes, okay, like the likes of Tau and Casper performed very well today, much stronger than Bitcoin has, but they fell harder as well. So just their overall recovery may not be as swift as Bitcoin's is, particularly with dominance over 62% at the moment. There will always be an outlier. Maybe Casper or Tau will be one of those. Tim, I have seen your thing about Coinag. I will try and show you. I'm not very good at it, but I will try. So yeah, it's had a good move today. I mean, I'll go down the 4 hours. We did all the other ones there. Look, actually, to be fair to it, got to be fair, it's actually above the 50 EMA. So we've had that strong move through it, which is exactly what you want. Green vector candle through it, and this one 2.5 hours to go though. But we're still above it right now. We have dropped. We've caught it back up. Want to see how this next couple of candles close. Maybe by the time we wake up tomorrow, 3 more candles time, we can have a good idea of where it is. But if that's how it was to end up, okay, well done. That's nice to see. That's what we want everything else to do. 4 hour, break above the 50 EMA, get out of the cloud, and move up to the next challenge. And so actually, we could do on a localized level, that'd be the top of it, assuming that's the bottom. Okay, got that 382 level there. But that 87 we talked about is also the 618. So yeah, plenty of work there. Okay, excuse me. Let's have a look at Bitcoin dominance. So we're back now kind of at the levels. I know we got to 64, but that was off a spike that took 5 minutes. We're now at that level at the moment, which we also touched on in Feb. So, 3 attempts at this. Definitely a lot more time spent around this level than previously, potentially building that support for that move up. We'll have to wait and see. But I do personally believe that we will be moving up to that, to retest. We talk about, that memory with vector candles. I just feel that that's where we're going to be going. It could take a while to get there. I mean, hell, this took over a month from the last time we got there. So maybe we were having this conversation in April. But that's kind of where I'm looking. In terms of CoinAnk, so Tim asked for this one. So what do you do? So when you go to CoinAnk here, so this week, if you ever load up onto CoinAnk, what you want to then move across to doing is going onto the Pro Charts and just hitting Pro Charts. And it takes you to a new page. Mine's already set up now. But you can do quite a lot of things with this. Let's just get rid of that for now. And you've got to just sort of spend some time going through what you like to see. So first off, you want to choose your symbol, and you can put any symbol on there. We can do it with Tau. That's a Tau, Binance, and then you see if you want perp or if you want spot. We'll go with spot. And then we can start to see that this is actually building up. But now I'm gonna have to do that again. Let's try that again. So I had the there we go. Okay, actually. Right, well, I thought that was going to come up with more shading, but I think I know why at the moment. So we've chosen what exchange we want it from and the token that we want it from as well. I'm going to put it back onto BTC just because I know what I'm going to get with that. Where's spot? There we go. You've got whatever time frame you want it on, so you can just select through those. And then this is it, indicators. And there are a plethora of indicators here, and I don't know what all of them are, but you can just go through. So I had large limit orders because I wanted to see what the order book looked like. You can have OI on there, you can have order book profile. You click one of these and give it a few seconds and it adds it on. So look, see that order book profile is on the side, and I thought that was going to be a really useful one, but when you put your cursor over it, it doesn't bring up the orders, so I took it off. So this is just large limit orders, the one that I previously had on. There's liquidity heat maps. You can scroll down, net long and short will give you stuff down there. Whatever you want to have a look at, they've got that information there. You can go into CoinAnk ones, and they've got specific ones that they may use as well. Which you can add, and I've got to try and get my head around this. I tried to keep it as simple as I could. And then you can add classic indicators on there if you choose to as well. Then you can change whether or not how you want that data, whether it is sort of just normal, if there's a volume profile to it, if it's bid and ask clusters. I don't know what cluster 3 delta is versus just cluster 3, as I'm getting used to it. You can give it a name, and then you can kind of change the heat sensitivity of some of these, which you can do on some of the other ones as well. But I was hoping you could change the colors, which I want to try and mess around with. But you can kind of see on the 1 hour, there's a lot of information sort of there. You can then, if you wanted, take it onto a higher one. And the information is still there, but we're using the 4 hour data charts now. So the candles are smaller. It's kind of looking less bright. But I just want to get rid of these. I don't know how to do that. I'm only really interested in this information there. And then you can build it through. And I appreciate that is not a foolproof version of it, because I've been using this for like a week and a half. And when I say using it, I mean literally set up what I saw, I showed you guys earlier, and then just looking at that. I've not really had a chance to sort of draw things on these or add any extra features or click on this, and I don't know what this is going to do or anything like that. You see, I've just realized now that I can, take that, draw a box, and then it'll display all that information up there, which may be useful to have a look at. I don't even know what the information is yet. So there's plenty of features on there, Tim. I would probably do what I'm going to do and just YouTube it and try and find if someone's done a demonstration on how to work it. But it's a free version. I used to use another book, Trading Light, which you have to pay for. And I'm just, in these austerest times of looking at my crypto portfolio, I feel like I probably can't afford to keep on doing that. Anyway, that's kind of where we are. It's almost an hour and a half. I feel like I've rabbited on for a long time. So have one quick look at the rest of the prices across the board. Kind of where we were at the start, to be honest. So Trump's obviously not said anything to undermine anything that's been going on. But I think we'll call it quits there. This trading pub as usual on Thursday afternoons. It will still be 1 p.m. UK time. So for any of you that are tuning in from anywhere else, just bear that one in mind with clocks going forward and all of that. As always, any questions, any feedback, anything like that, Discord, DMs, whatever, send them through and I will respond to them as I usually do. It's been a tough couple of weeks. It's been, difficult to swallow. We've seen a good day today. We need to see a couple more in back to back to see that. But, if you want to be looking at the charts, ignore the traditional charts at your peril. Just have a look for where they are. Even if you don't really understand it, is the NASDAQ going up or down? If it's going up, investors are wanting to get back in, okay? And then that will likely lead to more confidence back in Bitcoin. That's where I am at the moment. I just cannot see Bitcoin moving without the rest of the markets. And hey, I would love to be wrong because I've got far more of my funds in cryptocurrency than I do in traditional markets. But that's just where I'm sitting with that one. And yeah, let's see where we are in 7 days' time. Enjoy the rest of your evening and try and enjoy the rest of your week. God, I hate going to bed at night worrying about what the portfolio is going to look like the next day. But we will get through this, okay? Even if it's the end of this market, and I'm not saying that it is, we'll get through it and we'll see everyone through the other side. Enjoy the rest of your evening, everyone. Cheers now.